The CFTC just gave a huge approval for crypto spot trading on US exchanges, and some TradFi firms, despite adopting crypto, are trying to kill certain parts of crypto. I'll give you the details on what's happening. Let's get into it. Hey folks, welcome into the Thinking Crypto podcast. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, huge news coming out of the CFTC. So here's the headline: CFTC greenlights spot crypto trading on US exchanges. So the approval of these spot cryptocurrency products are to trade on federally regulated futures exchanges. In a Thursday notice, acting CFTC Chair Caroline Pham said the move was in response to the policy directives from US President Donald Trump. She added that the approval followed recommendations by the president's Working Group on Digital Asset Markets, engaging with the US Securities and Exchange Commission and consultants from the CFTC's Crypto Sprint initiative. Here's a quote: "For the first time ever, spot crypto can trade on CFTC registered exchanges that have been the gold standard for nearly 100 years, with the customer protections and market integrity that Americans deserve," said Caroline Pham. So folks, this is huge. You're getting the green light from agencies like the CFTC and the SEC, plus Congress is working on the crypto market structure bill. This will allow for more liquidity to come into the market. Remember, a lot of the institutions, many of them are still waiting on the sidelines and they can't go all in as yet because they need the clarity. They need the regulators to say it's okay, because many of them are risk averse. They don't want to get a lawsuit. They don't want to get penalized and much more. So with the rubber stamp of approval from these government agencies, it will allow the massive players, especially banks, to be able to come into the crypto market and participate in a bigger way. So this is very bullish. And of course, this week we saw SEC Chair Paul Atkins. He was interviewed on CNBC. He was at the New York Stock Exchange, and he talked about the SEC also providing rules and helping Congress to pass the Clarity Act. So we got both the right and the left hand, so to speak, here working together to get this through. So this is really big. And remember, the CFTC still waiting on the confirmation of Mike Seelig, who is, Trump's nominee for the SEC chair. But Caroline Pham, she's been doing a great job. And look, honestly, if she got the job as a chair, I would be all for that. But apparently she may have some other plans, but she's been doing an amazing job. And we'll wait for Mike Seelig to get into the office. And Mike is pro crypto. So this is great news, folks. Very, very bullish. Now, on the topic of the market structure bill, Jake Cherversky gave a great update here. He tweeted out the market structure bill December update. The Senate is working very hard to get this done, but the closer they get, the more complex it becomes. I'm not betting on a markup this month. 3 issues are holding up the bill: stablecoin yield, conflicts of interest, and DeFi. So stablecoin yield, we know a lot of the banks are fighting back, right? They don't like that you can earn higher yield on exchanges like Uphold or Coinbase or whatever it may be. So they're trying to block that, but they have already lost. Conflicts of interest. Some Democrats are saying, hey, Donald Trump and his crypto coin and businesses, they don't like that. And then DeFi is certainly a big one. And we're going to talk about what Citadel Securities is trying to do. But first, let me continue here with what Jake had to say. So Jake says, reminder, market structure legislation may be the most important crypto policy objective, period. It would clarify which tokens are non-securities, how centralized platforms are regulated, and more. Done right, it protects crypto from a Gensler 2.0 regime in 2029 or beyond. The House already passed its version of the bill, the Clarity Act, in July. In the Senate, banking is working on one half of the bill, the securities law, while agriculture works on the other half, the commodities laws. Both committees publish drafts this fall. Next step is markup. Markup means the committees hold hearings to vote on amendments and then on sending the bill to the Senate floor for a full vote. Neither wants to do this until they're sure both drafts will get a passing vote, and that won't happen until the remaining disputes are resolved. So, folks, don't expect the market structure bill to get passed this month. It's not happening. And it doesn't look like the markups are going to happen this month either. There's just a lot to get through here. And look, it's better that we're patient and they get it right. And there are some things to resolve. So it's going to have to go back and forth for a while. And look, this is government, right? They move slow, sometimes as slow as molasses, but it is what it is. But the fact that it is in the Senate, and we have made it this far is incredibly bullish and a big win when you think about all the things that don't make it through the Senate. The Senate is very hard to move legislation. And spending time in DC and speaking to a lot of members of Congress and advocacy groups and so forth, I've learned that it's easy to get things through the House, but the Senate is very tough. So the fact that we're at this stage is still a big win. Obviously, we all want this to pass, but it's looking like this could pass by the end of Q1 2026. Maybe sooner. Let's see what these folks are able to do. So this may align with some sort of market rebound. You got the macro lining up. You got the Fed chair was going to be switched out next year. That new chair is going to do the bidding of Trump, cut rates aggressively, maybe go full on QE. So I think things are aligning here, a certain timeline. I know we all want it to happen sooner than later, but we don't control that. But we can at least look at the facts and where things are at and see how that may affect the market. But I still think this is going to be very big for the market, a big buy the rumor, sell the news event situation. Now, I mentioned earlier that some TradFi firms are trying to attack crypto. We've seen a lot of banks and Wall Street firms are adopting crypto, right? That's fine. But some of them behind the scenes are trying to kill certain things, like the stablecoin yield you can earn on different exchanges. They don't like that, right? Because they're giving you bullshit interest payments in your checking or savings account, and they're keeping the majority of the money, right? So they don't like that you can go on, once again, Uphold or Coinbase or whatever and earn higher yield staking and on stablecoins. But look at this, Citadel, so that's Citadel Securities, they wrote to the US SEC calling for tighter rules on tokenized assets and DeFi. The crypto community, of course, is pushing back. But you see what's happening here? They're getting disrupted and they're still trying to pull their strings, right? We've heard Citadel say they're going to adopt crypto. We see that all of them are trying to launch ETFs or adopt ETFs, trying to launch stablecoins, trying to tokenize, but they don't like that crypto native firms and certain other firms who have more freedom to build and innovate. They don't like that, right? They're trying to stop it. And they're going to try to kill certain aspects of DeFi and crypto. And here, Hayden Adams, the founder of Uniswap, which many of you know is a decentralized exchange, he said, first, Ken Griffin, who's the founder and CEO of Citadel, he screwed us over on the Constitution DAO. Many of you know that story. Now he's coming for DeFi, asking the SEC to treat software developers of decentralized protocols like centralized intermediaries. Hayden says, bet Citadel has been lobbying behind closed doors on this for years. These are the people who were lobbying Elizabeth Warren and Gary Gensler. I've been saying that for years, right? It was these banks and these big time Wall Street firms. They hate the fact that they couldn't offer crypto and you could go to Coinbase or Uphold or wherever and buy crypto and stake and do all that because it was bypassing them. They hate that. So they lobbied and weaponized Gensler and Elizabeth Warren. And, we know about the attack that took place over the 4 years. That's why a guy like Gary Gensler, who understands crypto, who was teaching it at MIT and was pro crypto, went to the SEC and all of a sudden did a 180, right? And he started attacking it and doing unlawful things and speaking as if he didn't know about it. And he went against the past statements he made at MIT, right? Because he was just a neutral party at that point. But when he got to the SEC, the phone call was made and Elizabeth Warren, she enabled him. It wasn't so much Biden. Obviously, Elizabeth Warren had that top financial oversight seat. And so she was, running amok. But they got defeated, clearly. But that's not stopping some of these TradFi folks. Okay, Hayden continues here saying, okay, that's all pretty bad. But the actual nerve for one of these arguments to be that there is no way for DeFi protocols to provide fair access for all things. He says, laugh out loud. He says, makes sense. The king of shady TradFi market makers doesn't like open source peer-to-peer tech that can lower the barrier to liquidity creation. He's spot on. We all know about Citadel and the whole Robinhood, GameStop, and all that stuff, right? I don't need to go through that. If you don't know, go research it. But that in itself is a whole other podcast. But you can see these guys are fighting back. The banks don't like you're getting stablecoin yield. Citadel's like, oh, we don't like DeFi, right? We don't like the fact that eventually you can put tokenized assets in DeFi. We want to control it. We want it to run through centralized rails like it's been, historically. But it ain't going to happen. Disruptions here. Now, could they lobby really hard and put a ton of money and flip certain people? Sure. Although I don't think Donald Trump is going to allow it in this administration. Now, we got to get crypto legislation through before Donald Trump leaves office. That's for sure. So I hope you see what's happening here, and we got to keep fighting. But the crypto industry is ready to fight and push back on this. I tweeted out about this today. I said, we still have a fight on our hands. Citadel, JP Morgan, and other TradFi firms are adopting crypto, but still trying to stifle and kill certain aspects of crypto. They want to take over and control it. So we still got to fight, folks. I'm going to talk to some people in DC and I'll try to bring them on the pod and, see if we can get you guys the updates. Now, folks, this episode is brought to you by VeChain. VeChain is one of the top layer one blockchains out there. They're getting adoption by many brands and companies around the globe. I'm a VET token holder. I have been for many years. I'm very bullish on this project. And they have 5 million plus active users, 350 applications built on VeChain, and they've been around since 2015. They're partnered with Dana White and the UFC, and Dana White just this year said he bought $1 million in VET token. And some of the great features of the VeChain blockchain includes it's scalable, secure, fast, compliant, and purpose-led. Some of the brands and companies working with VeChain include Boston Consulting Group, PwC, Walmart China, BMW, and many more. And they also offer staking now via Stargate. So once again, I'm bullish on this project. I'm a VET token holder. I have been since 2018. So if you'd like to learn more about VeChain, go to vechain.org. Link will be in the description. Now, folks, look at this. The first SUI-based ETF approved as 21 shares brings leverage fund to market. So we're seeing a lot of altcoin ETFs get approved. So the 21 shares 2X SUI ETF was approved for trading on Thursday on the NASDAQ exchange. TXXS marks the 74th crypto ETF to launch this year and the 128th overall, according to Bloomberg. So we are seeing an altcoin ETF explosion, and it's not just simply spot, but you got some leverage products here. Now, whether you like the leverage product or not, that's, for the free market to determine. I personally wouldn't get involved with this, but, it is what it is. Everybody has to pick and choose how they want to invest. Moving ahead, Coinbase incubated Ethereum L2 Base network rolls out a bridge to Solana. So we know Coinbase, they built Base, which is their Ethereum layer 2, and it looks like they're building this bridge to Solana, which is smart. So popular Ethereum layer 2 Base will now support Solana Base assets natively and enable the export of Base assets onto Solana via a new cross-chain bridge. The cross-chain infrastructure is powered by Chainlink's cross-chain interoperability protocol. Now, I hold ETH, Solana, and Chainlink in my portfolio. So you can see I'm betting on these chains that are getting adoption, and that's what's important, right? You don't want to be emotionally involved, but just look at the real world adoption. And this is a smart move by Coinbase. It helps expand their ecosystem. This is good for Solana. It gets more transactions and all these things on their protocol or on their blockchain. And of course, Chainlink, the connector of all these things, is one of the blockchains and tokens I'm very bullish on, because you can see Chainlink's technology is being used by blockchains and TradFi firms because it is solving some real world problems here. This is really great. Now, look at this news. CNBC taps Kalshi to bring real-time prediction data into financial coverage. This is huge. You got mainstream media here integrating these platforms that use blockchain tech. And this is a great example of how this market is maturing and people are integrating the technology in different ways. So Kalshi will provide real-time prediction data across CNBC's TV, digital, and subscription platforms beginning in 2026 as part of a multi-year partnership. And just this week, we heard about Kalshi's moving to court crypto traders with tokenized betting contracts, and they're doing that on Solana. So lots of development happening here, guys. It's incredible. And I love seeing news like this, right? The convergence of TradFi and the traditional tech world with crypto. Now, Jack Mallers' 21 Capital eyes Tuesday debut following Cantor Equity Partners mergers. So it looks like 21 Capital, which is a Bitcoin treasury company, is going to go public here. So let me give some details. 21 Capital, a Bitcoin-focused financial company led by Jack Mallers, expects its shares to begin trading on the New York Stock Exchange next week, following the completion of its merger with Cantor Equity Partners, a special purpose acquisition company. The announcement on Thursday followed shareholder approval of the deal at Cantor Equity Partners meeting, clearing the way for 21 Capital to list Tuesday under the ticker symbol XXI. Final voting results from the meeting are expected to be disclosed in a forthcoming Form 8K filing with the US SEC. So big news here, more companies going public, more crypto companies, that is. So I think we're going to see more and more of this as we head into 2026. Okay, moving ahead. Former Binance US CEO launches stablecoin platform ahead of L1 network. So One Money, a company co-founded by the former CEO of Binance US, has launched a stablecoin orchestration platform ahead of its plans to build a layer 1 blockchain for payments. In a Thursday announcement, One Money said the platform by the same name will have zero platform fees, opting instead for usage-based fees for transactions involving stablecoins and fiat. According to the company, the initiative will continue on One Money's layer 1 network for stablecoin payments, offering no gas fees. Here's a quote. For too long, the legacy stablecoin service providers have held the ecosystem back with outrageous high monthly minimums and bloated fees. One Money is ending that era, said Brian Schroeder, One Money co-founder and CEO and former CEO of Binance US. Very interesting. We'll see if it works out, right? A lot of innovation happening, and that's very bullish, right? With the Genius Act passed, you're going to see a lot of stablecoin innovation, folks. So here's a clear example, and it looks like they want to launch their own layer 1 blockchain, but I don't know how many layer 1 blockchains we need. Well, let's see. The free market will determine who's going to win this battle or this war. Now, look at this, and I hope I pronounce this right. Huizia, a state-linked Chinese bank, tokenizes $600 million in yuan bonds. So we're seeing tokenization happening across the globe. And, China is out there saying, oh, we banned crypto and whatever. Yet you look at what Hong Kong is doing. They've launched ETFs. They're tokenizing, doing much more. So China is just putting up a smokescreen. You got people and banks related to China, very closely linked, doing all these things, right? So Huizia Bank, if I'm saying that right, I might be butchering it, a publicly traded financial institution linked to China's government, issued 4.5 billion yuan or $600 million in tokenized bonds on Wednesday, aiming to reduce clearing friction by removing intermediaries from the auction process. According to Sina, the on-chain government bonds were issued by Huizia Financial Leasing, a subsidiary of Huizia Bank, a state-controlled commercial bank in China. The bonds offered a 3-year fixed yield of 1.84% to holders. So the $600 million bond tranche was auctioned off exclusively to holders of, look at this, China's digital renminbi, also known as the digital yuan. So China said, that's fine. Use our CBDC. Wow. Now, which blockchain did they tokenize on? I don't know. The article, I don't think gives that detail, but I would love to hear know about that. That might be something they keep under wraps here. Or maybe they have a proprietary blockchain, but it doesn't say which one. But man, this is why you got to be careful, folks. Watch what they do, not what they say. They can say, oh, this is banned. But when you look at what the actual people are building and doing, tells a different story, right? Okay, moving ahead. Soulmate, so Solmate, looks beyond Solana's treasury model with Rockaway X acquisition. So Soulmate, a former Barrera Holdings PLC, has signed a non-binding term sheet to acquire Rockaway X, a deal that would shift the Abu Dhabi-based Solana company from a passive digital asset treasury to a unified platform offering infrastructure, liquidity, and asset management services. So essentially, this is a Solana digital asset treasury company, and they're doing this acquisition to expand their services, which is smart. I think these digital asset treasury companies need to do more than just hold the asset, right? Generate revenue in other ways, integrate things that complement the asset that they're holding, and which can help increase their value and provide greater yield and returns to the holders of the stock. So according to Thursday's announcement, the all-stock deal would see Soulmate acquire all of Rockaway X's operations, including its validator infrastructure and on-chain liquidity business, as well as its venture and credit funds, creating a combined entity with more than $2 billion in assets under management. Wow. So the global expansion of crypto continues, massive mergers and acquisitions, investments. It's amazing what's happening. It's so exciting. Final news item here: Digital Asset raises fresh funding to scale Canton Network adoption. Couple of things here. Remember, I've been telling you guys about Canton Network. That token's not available yet, but I told you all, watch this right here, because that's what I'm going to be looking to buy. Now, I'm not going to buy into any pump. I'm going to wait for it to cool down. Anything that launches and it goes crazy and all that, but you want to buy when the blood is on the streets, right? And Digital Asset is the firm. I interviewed Yuval Ruz, the co-founder and CEO of Digital Asset, about three months ago. If you haven't seen that interview, be sure to check it out. This network, by the way, is backed by the major Wall Street firms. So Digital Assets said roughly $50 million in funding came from BNY, America's oldest bank and the world's largest custodial bank, iCapital, NASDAQ, and S&P Global will help scale the Canton Network as institutions warm to on-chain tokenization. So Canton Network is a layer 1 blockchain that is privacy focused, is built for institutions, and is backed by Citadel, Goldman Sachs, and so forth. So this is why I'm telling you, watch this one, right? Remember, I'm telling you this, and I don't have the token yet, so I don't want you to think I'm pumping my bags. I don't. But when I did the interview and I started researching, I'm like, wait a minute. Wall Street is building its own blockchain here, and it's going to be a public blockchain, and they're going to have a token. I'm going to invest in that, right? Because I'm here to make money, guys. So that's why I'm sharing with you guys. And once again, I don't have the token. It's not in the open market yet. So once they do put it out there and it corrects, I'll be scooping up some, maybe it's in the bear market. I don't know. I'll let you guys know when I do take a bet. But again, watch this one. Folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. Folks, a great way to support the podcast is by subscribing to my free email newsletter. It is 100% free. Link will be in the description. Check out my book on Amazon. It's available in paperback and digital. And my course at mycryptocourse.com. This is a comprehensive course that teaches you everything you need to know about crypto. So if you want to expand your knowledge about this technology in this market, this is the course for you. Folks, thank you so much for tuning in. I appreciate you all, and I'll talk to you all later.